You were listening to chartingwealth.com for Tuesday, the 21st of August, 2018. We sent out, as promised, around 7:38 p.m. yesterday. That was Sunday evening, the training to all of the book purchasers. We so appreciate you purchasing the book, and we'll continue to put out that special training to everyone who does buy it. You can find the links in your show notes. However you are listening to or watching us, whether it's on YouTube, whether it's at the website, you get our free daily email, which is our daily market review 4 days a week. And for that fifth day, the comprehensive review and forecast. Please look at the show notes. You will see links to buy the book, Charting Your Way to Wealth, that explains everything we do. And all those special trainings go out to the book purchasers. This one was on Bitcoin, and it was our special Bitcoin chart. We also provided you a copy of that and how we use the 2-hour chart with that special chart that we've outlined to track Bitcoin. It's pretty cool. I know you guys like it. The feedback we've been getting is great on it. So I encourage you, if you're interested in Bitcoin, use that chart to practice. Now, let's jump into this market. What do we see going on? Stocks mixed. S&P up for the day. The NASDAQ 100, the Qs down for the day. 20-year bonds up. Gold up. Let's jump first into the S&P 500. Continues to move up. We had a red spinning top ending the last week, which meant, of course, indecision tending down. It wasn't a solid red candlestick. It's our Heiken Ashi spinning top. Market was digesting some of those gains, at least the way it started out the week, up 0.21% on Monday. So we have the derivative oscillator gaining momentum, price percent oscillator moving up. Now, this is just the first day of a 5-day candle, so don't get overexcited. What do we see going on as far as the latest candle? Well, it's a green up candle after 3 prior down candles, never crossed over going down. Derivative oscillator gained just a little bit over the last 2 days. So again, price percent oscillator is flat, derivative oscillator is gaining a little bit. We see a green candle. What about that 4-hour chart? What's going on? Well, of course, it crossed over going up in the afternoon on Friday. Told you to watch as to how the market opened on Monday, and it opened and continued to climb up. What does that mean? Well, our 2-day chart was primed to go up. The weekly chart was primed to go up. 4-hour chart rotated over on Friday afternoon. You had your jumping in point on Monday. Hope you did it and you are in that practice trade. Now remember, we're not a stock calling service. We're not at all in any way giving advice to use money in these trades. We want you to practice with us and get good at it. Then you can combine all your market knowledge you've learned everywhere, reading books, other courses, classes, practicing. You can make up your own mind what to do with real money, but we are not a stock calling service. We specifically disclaim that. So, hope you're practicing with us and learning. We encourage you to keep practicing. Use those trade worksheets. What do we see going on the Qs? Well, down for the day, 0.09%. We have forming so far a doji, which means, of course, following the prior week's spinning top. This means even more indecision and, of course, tending down. It's trying to cross over going down. Again, just the first day of the latest weekly candle, so we'll just keep watching. Derivative oscillator losing momentum. Price percent oscillator trying to cross over going down on that weekly chart. 2-day chart, of course, it confirmed its crossover going down back on the 10th. And, of course, we have 2 now solid red down candles. Price is still above the weekly, but does appear to be moving toward that derivative oscillator gaining momentum. Price percent oscillator heading down. 4-hour chart. It's really just spinning sideways. So we'll continue to watch things. Derivative oscillators losing downward momentum, but we don't have a potential trade until and unless we see that 2-day chart crossover going up in the same direction as the weekly, or that weekly crossover going down. We'll keep you posted. Don't have a trade right now. Now we're going from the stocks, the 2 stock indexes we track, to the TLT 20-year bonds. What do we see there? Well, it looks like we're going to our 2nd week of up movement. It looks like also the derivative oscillator is trying to flip over going up. Price percent oscillator is heading up. We have a nice big green up candle. Now, this is just the first day of the latest one. Remember, the weekly is in a confirmed up move. 2-day candle has just crossed over going up, which is a good sign for a potential up play setting itself up here very soon. We shall see if indeed that works out. And what we're doing, for those who are watching, those of you listening, we are using the super cool software that we have with a charting web-based product that we use by, of course, our friends over at the Warden Brothers, TC2000, and of course, freestockcharts.com. If you go to any of our show notes and any of the formats we put out our material, you will see that you can get a $25 discount if you sign up. And of course, it's the only charting software we use. I personally love it. We are now in a confirmed up move on the latest 2-day candle, 4 2-day candles in an up move on bonds. What do we see going on the 4-hour chart? It's been going up since the 3rd. Now, of course, that's the 3rd of August. We're going to need to see a pullback of some kind before we can jump in. The last thing we want to do is buy at the highest point. That's the sucker play. So again, we wait for the 2-day and the weekly to be moving in the same direction, then a pullback on the 4-hour chart. And once it crosses back over in the same direction, that's our jumping in point. Of course, the other one is a weekly vertical crossover going in one direction or another. We haven't had that happen yet. Those things are explained in our book. Now, from bonds, we go lastly to gold. On the weekly chart, gold up 0.50%. Again, the Heiken Ashi candlestick, which shows average pace, that's what that means in Japanese, shows us a red candle. We'll get a little more into what actually occurred with price movement. That's showing us the average pace. Derivative oscillators lost momentum going down, and we see that the price percent oscillator is still heading down, not quite at the same clip. So derivative oscillators pull back a little bit, go from the 2-day, from the weekly to the 2-day, where we have a green up candle. Now again, a small one, particularly when you look at the prior 2-day drop, but the derivative oscillators lost momentum. The price percent oscillator's gone from down to flat. So again, we will keep that in mind. And then what do we see on the 4-hour chart? Well, of course, it now has crossed over going up on gold. So again, if you've been writing gold down since that beautiful crossover, we gave you some warnings that it could be going flat on us. And of course, we saw things as they might have been bottoming out. Well, of course, that has been confirmed on that 4-hour chart. So don't lose what you have gained. Again, when you're in trades, always remember that the first rule of trading is not to lose money. Second rule of trading is to make money. Don't get greedy and stay in too long. And even if you have stayed in too long, don't hesitate to cut your losses when you look at all the charts all the time to help you make those decisions to pull out. That derivative oscillator losing momentum, price percent oscillator going flat, and then moving up at the end of the day on Friday was, of course, a telltale sign that gold might be ending. And just, I mean, again, it's just the 4-hour chart. We've still got a lot of movement before it catches up to the 2-day and the weekly trend line. So we'll keep our eye on gold. That's where we are as the end of the day. On Monday, going to Tuesday the 21st. Thank you so much for being with us. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.